Joining us now, Point72 Asset Management Chief Economist Dean Maki and Advisors Capital Management CIO Chuck Lieberman. It's great to have you both with us. Dean, I'll begin with you on what Sarah and I were just finishing talking about. Is the Fed going to pull this off? Did they already?
Well, certainly the last 6 months of inflation have looked very good. And as you're saying, we did not require a recession to see that disinflation happen. And we have not thought that there would be a recession. We don't think a recession's coming next year either. And the main reason for that is really the resilience of the service sector. The service sector employment is still, many sectors are still below pre-COVID levels. And that gives a major tailwind to the economy. And so what's happened is that pandemic-related surge in prices has unwound, and that really didn't require a sharp rise in unemployment to get there.
So, Chuck, then, if you believe what Dean is saying, I mean, the data sort of bears it out, what's it mean for markets in 2024?
Well, I think it means very clear sailing, and I do agree with Dean. I'm not looking for a recession. I don't think one is on the horizon. There are too many parts of the economy that are very healthy and are looking like they should continue to expand, and you can run through them pretty quickly. In the manufacturing side, Boeing is doing extremely well, the single largest exporter in the U.S. The auto sector has got to rebuild inventory. Look at housing. Even last year when interest rates kept on rising, housing bottomed out, and now it looks like it's about to take off because rates have come down. When you look at other parts of the economy, government spending on infrastructure, both green initiatives and also to bring manufacturing back onshore, all of that presents tremendous tailwinds for the economy. I don't see a recession.
Yeah, when you say things like, very clear sailing, I can't help but think what some in the last couple of days on Wall Street have said that, one of the fears is that there's nothing to fear. Are you concerned at all that there doesn't seem to be very many bears left at this point?
Well, it's all a matter of timing. Some people would say I'm a bear because I think that labor costs continue to rise at a pretty solid clip, and so does hiring. And the net result of that is it limits the potential for wages to come down, and wages represent roughly 70% of the cost of producing GDP. So I don't see the improvement in inflation necessarily being sustained. Some of what has occurred is merely the reversal of the transitory factors that were pushing inflation up a couple of years ago. That's now come out of the economy. But under that trend, if you look at labor costs are still rising at a pretty solid clip, and so is hiring. So there's no reason to think that the job market is going to get looser. It continues to get tighter. Temporarily, we had a surge in labor supply, I think because of baby boomers coming back into the market because the pay was too good. And I think also we had a lot of illegal immigrants who were hired. They need to work, they need to put food on the table, and firms need labor, so they hired them. But that means that the growth is not going to slow, and it also means labor costs are not going to come down that much more.